Good afternoon, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, tightening up your holding periods during a volatility spike. So I want to just highlight the volatility index here today. This is a 10-day chart of volatility where you can, I suppose I should have pulled up a 1 month chart, but this will suffice. You can see we had been on a nice trajectory lower through the end of last week from really just a record period of high volatility and a large number of days where volatility had traded above this magical 20, which is an indication of dislocation and fear in the market. But as I said on Friday, we really had been retreating, and this week I fully expected that retreat to continue down from a close of just above 17, and actually thought we had a shot at getting below 15, which really would have been a completion of the normalization process off of the tariff tear. Alas, I was incorrect on that. You can see volatility has been really choppy this week, culminating in yesterday midday when the bond auction, the 20-year bond auction from the Treasury, had difficulties. You could see fear in the market really spiked back up above 20. And once again today, volatility spiked above 22 before settling back down to close just over 20. It's this little volatility spike that should have been informing your intraday trading today. And specifically, yours truly really didn't get that message. It turned out okay, but I should have been more in tune with that concept of tightening up your holding periods during a volatility spike, because really all bets are off in a volatility spike. Anything can happen, including significant losses. So there's value in holding that, or keeping that holding period very, very short and on a tight leash. So heading into today, pre-market, the arbitrage, as you know, I like to triangulate my four pillars of rational trading vis-a-vis what's happening in the pre-market, vis-a-vis what's happening from the fiscal side of the equation, the economic data points, and the monetary side as well. Today's focus was really on the fiscal side, the passing of the big, beautiful bill. Tax cuts, tax cuts, tax cuts, increase in the SALT state and local tax deduction, which is huge, right? Very, very stimulative. And so this little dud of in pre-market trading, you had the technology stocks in particular trading lower. Now they did rally pre-market right up to the bell, where we did manage a positive open, but it was still very, very muted. And considering the ultimate risk on trade, Bitcoin was, what are we at? 112,000 this morning, 111,000 or thereabouts. Bitcoin's on an incredible run, telling us that, hey, come into the pool, the water's warm. But again, got to remember that volatility spike that we had yesterday. I should have kept this trade on a very, very tight leash. I was really enthusiastic, more so than I should have been, to the point of ignoring that volatility spike and believing that, you know what, there's going to be a celebration of this big, beautiful bill. Stocks are going to rally. I had the analysis right, and we did get a spike in the first 30 minutes of trading. Pretty much got my target. I set a target at 519, again, because I thought the trade was going to run throughout the day and really explode throughout the day. Again, I was wrong. The analysis was right. Should have closed here in the first 30 minutes. I didn't. We sold off. Still had a nice gain. Not a nice gain, but a gain. And but held out again, waiting for the next spike to this peak, knowing that I learned my lesson that when we get that spike, I'm shutting her down. We got the spike right around midday. We exited the trade. Let me just look quick at when we exited the triple Qs today, if I can find it for you quickly. Okay, we got out at 50 basis points of gains at just over 516. So really, right here at just over 516, late morning is when we closed this trade. Didn't quite get back to this peak, although we actually did get back to the peak. But I was fine locking in 50 basis points. Why was that? Because of the volatility spike. Yes, there were better exit points here and then here again, but whoa, hold on there. We closed at 514. Why did we close at 514? You said it, the volatility spike. So really, the lesson was, got the analysis right, ignored this volatility spike here, which should have had this trade on a very tight leash, which is, by the way, is something I tend to do anyway, but I really did, again, give way more credit to a market that I thought would celebrate the tax cuts and the passing, at least in the House, of the big, beautiful bill. Didn't play out that way. No harm, no foul. We still closed the trade for 50 basis points today. So hope you found this helpful. This is JD for The Rational Trader. Tomorrow is podcast day. I will be back on Monday with another video. Take care. Have a great day, and we'll see you next time.